What if I told you that the most explosive stock market opportunity of this decade isn't coming from a flashy, headline-grabbing tech startup or a company promising the next big social media app? Instead, it's a quiet, often overlooked giant, one that's been steadily building the backbone for the next wave of technological advancement right under our noses. This company isn't making noise in the press, but it's quietly enabling the world's biggest breakthroughs, powering the infrastructure that makes innovation possible. While others chase trends, this giant is laying the foundation for the future, brick by brick, watt by watt. Imagine a stock that's already soared 1,000% in just a single year. That kind of growth is rare, but what's even more remarkable is that this company is still just getting started. Its true potential is only beginning to be realized as the world wakes up to the scale of the opportunity. This isn't some speculative penny stock or a risky gamble. We're talking about a foundational player, one whose technology has become absolutely essential for the world's largest corporations. From tech giants to manufacturing titans, their solutions are now woven into the fabric of global industry. Right now, we're standing on the edge of an energy crisis, one that's being accelerated by rapid innovation and the insatiable demand for power. In this high-stakes environment, this company holds the key to unlocking a more resilient, reliable, and sustainable energy future. The energy sector is transforming at breakneck speed. The winners won't be those clinging to outdated centralized grids, but those pioneering decentralized scalable solutions, systems that can be deployed almost instantly, anywhere they're needed, and scaled up as demand grows. These innovators aren't just selling electricity, they're selling peace of mind. Certainty in a world where blackouts, cyber threats, and supply chain disruptions are becoming the new normal. Their technology is a lifeline for businesses that can't afford a single second of downtime. So get ready, because what you're about to discover could completely redefine your investment strategy and open your eyes to a new kind of opportunity, one that's not just about chasing the next trend, but about investing in the very foundation of our future. Hit the like button, share the video and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Before we dive in, remember, this content is for educational purposes only. This is not financial advice. Every investment decision should be based on your own research and due diligence. Now, let's get back to the incredible story unfolding in the energy sector. The world is electrifying fast, but artificial intelligence is pushing energy demand into overdrive. AI isn't just about smart chatbots, it's powered by massive, energy-hungry data centers running 24/7. Experts predict the world's power grids may need to triple capacity by 2030 just to support AI growth. This surge is happening now, not in the distant future. Every new AI advancement requires more computational power and more energy. Multiply a single AI query's energy use by billions and the scale of the challenge becomes clear. The digital world is expanding exponentially, but power generation is struggling to keep up. Reliable, scalable energy is now the most critical resource for economic and technological progress. This crisis has created a massive opportunity for the company providing the power behind the AI gold rush. Our traditional energy infrastructure, centralized power plants and vast transmission lines, is aging and slow to adapt. Building new plants can take a decade or more, far too slow for today's fast-moving industries. Tech companies need power in months, not years, creating a huge mismatch between digital ambitions and analog infrastructure. Existing grids are increasingly fragile, vulnerable to weather, security threats, and simple wear and tear. A single failure can cause costly blackouts, making reliability a top concern. Major energy consumers now demand more control, seeking solutions that can operate independently of the grid. Utilities can't build fast enough to meet the exponential demand from AI and electrification. This has created a desperate need for fast, reliable, on-site power solutions. The most innovative energy companies are stepping in to fill this gap. That's why they're poised for explosive growth. To overcome grid limitations, companies are turning to on-site power generation. This shift is driven by the need for more reliable, efficient, and sustainable energy solutions. Traditional power grids are often outdated and unable to keep up with the growing energy demands of modern businesses. By generating power on-site, companies can ensure a steady supply of electricity, reduce their dependence on external sources, and mitigate the risks associated with grid failures or blackouts. Modular fuel cell systems are leading this revolution. Quiet, efficient, and able to provide clean, continuous power. These systems are designed to be highly adaptable, making them suitable for a wide range of applications, from small businesses to large, industrial facilities. Their modular nature allows for easy scaling, so companies can start with a small installation and expand as their energy needs grow. This flexibility is a key advantage in today's rapidly changing energy landscape. These energy servers are factory-built, shipped, and installed on site in a fraction of the time it takes to build a traditional plant. This streamlined process not only saves time, but also reduces the overall cost of energy infrastructure projects. By minimizing the need for extensive construction and permitting, companies can quickly deploy these systems and start reaping the benefits of on-site power generation. This speed and efficiency are crucial in a world where energy demands are constantly evolving. Businesses can start small and scale up as needed, matching power infrastructure to operational growth. This scalability ensures that companies are not over-investing in energy infrastructure up front, but rather they can incrementally increase their capacity as their operations expand. This approach is not only cost-effective but also aligns with sustainable business practices, allowing companies to grow responsibly while minimizing their environmental impact. On-site fuel cells offer unmatched reliability, immune to grid disruptions. These systems are designed to operate independently of the traditional power grid, providing a consistent and reliable source of electricity, even during extreme weather conditions or other emergencies. This reliability is particularly important for critical infrastructure and businesses that cannot afford any downtime. By ensuring a continuous power supply, on-site fuel cells help maintain business continuity and protect against potential losses. They can serve as a primary power source or work alongside the grid, giving customers control and stability. This dual capability allows businesses to optimize their energy usage, switching between on-site generation and grid power as needed. By integrating with existing grid infrastructure, fuel cells provide a seamless transition and enhance overall energy resilience. This flexibility is a significant advantage in managing energy costs and ensuring a stable power supply. Fuel flexibility is key. Modern systems run on natural gas, biogas, or hydrogen, paving the way to a zero-carbon future. This versatility allows companies to choose the most suitable and sustainable fuel source for their specific needs. As the availability of renewable fuels increases, businesses can transition to greener options without needing to overhaul their existing infrastructure. This adaptability supports long-term sustainability goals and helps reduce the overall carbon footprint. As green hydrogen becomes more available, these systems can transition seamlessly to 100% carbon-free electricity. This transition is crucial for achieving global climate targets and reducing greenhouse gas emissions. By investing in fuel cell technology now, companies are positioning themselves at the forefront of the clean energy revolution. The ability to switch to green hydrogen ensures that businesses can meet future regulatory requirements and consumer expectations for sustainable practices. This adaptability makes them a future-proof investment for sustainability-focused companies. By adopting on-site power generation, businesses can demonstrate their commitment to environmental stewardship and corporate social responsibility. This not only enhances their brand reputation but also attracts environmentally conscious customers and investors. In a competitive market, sustainability can be a key differentiator, driving long-term success and profitability. They're not just solving today's crisis, they're building the bridge to tomorrow's clean energy economy. By investing in innovative energy solutions, companies are contributing to a more sustainable and resilient future. This proactive approach ensures that they are well prepared to navigate the challenges of the evolving energy landscape. The on-site power revolution is not just a trend, it's a fundamental shift towards a cleaner, more efficient and sustainable energy system. The on-site power revolution is here and it's changing everything. From enhancing energy security to promoting sustainability, on-site power generation is transforming the way businesses operate. As more companies adopt these technologies, we move closer to a future where clean, reliable, and efficient energy is the norm. The impact of this revolution will be felt across industries, driving innovation and setting new standards for energy management. The company at the heart of this revolution is Bloom Energy, ticker BE. Bloom's solid oxide fuel cell technology powers its modular energy servers, delivering clean, reliable electricity without combustion. These systems are already in use by major tech, healthcare, and retail giants, providing always-on power for critical operations. Unlike backup generators, Bloom's servers deliver uninterrupted electricity, making them a primary power source. Their purpose-built design allows for quick installation and easy scaling, tailored for high-value applications like data centers. Bloom's focus on solving specific high-stakes problems has made it a leader in on-site power generation. Identifying companies like Bloom before explosive growth requires deep value investing insight. Bloom is now perfectly positioned to capitalize on the coming wave of energy demand. Bloom Energy isn't just an energy company, it's a critical enabler of the AI revolution. Data centers need more power, fast, and with absolute reliability. Bloom delivers on all fronts. Tech giants see Bloom as a strategic partner, not just a vendor, unlocking growth by providing dependable on-site power. Bloom's solutions let operators build facilities where the grid is constrained, giving them a major edge. Recent partnerships with American Electric Power, Quanta Computer, and Oracle show deep industry confidence. The game changer. a $5 billion partnership with Brookfield Asset Management to deploy Bloom's systems at AI infrastructure factories. This positions Bloom at the very start of the AI supply chain, powering the hardware that will run tomorrow's models. These aren't pilot projects, they're multi-megawatt deployments cementing Bloom's role in the AI ecosystem. The stock's surge reflects Bloom's new status as an indispensable player. The market has noticed Bloom Energy's pivotal role. Its market cap has soared to $26 billion. This isn't hype, it's backed by a track record of execution and strategic wins. Bloom's revenue has climbed steadily, with Q2 2025 showing a 20% year-over-year increase, and a third consecutive record quarter. Demand for Bloom's energy servers is accelerating as industries recognize the need for on-site power. Bloom is also innovating in the hydrogen economy, with high-efficiency electrolyzers and fuel cells for carbon-free electricity. AI-driven digital twins optimize performance and reduce costs for customers. Bloom Energy currently sits at a market cap of $24.97 billion, posting earnings per share of 0.11 and a sky-high PE ratio of 984.91. In 2024, the company generated $1.47 billion in revenue and delivered $23.65 million in net income. Behind those numbers is a business that quietly built for 8 years in stealth before emerging to design, manufacture, and market solid oxide fuel cell systems that deliver on-site power, an approach aimed at cleaner, more reliable energy right where it's needed. What stands out first is momentum. Over the last 5 years, Bloom's revenue has compounded at an annualized 15.8%, outpacing the average industrials peer and signaling that its products are resonating with customers. Just as important, the cash picture has improved. Free cash flow is ultimately what pays the bills, and Bloom's free cash flow margin has expanded by 19.5 percentage points over the past 5 years, reaching 2.7% over the trailing 12 months, a meaningful shift towards self-funding growth. Finally, returns on invested capital have been trending higher. Rising ROIC suggests the company is getting more operating profit out of each dollar it's put to work, a dynamic that can catch the market by surprise and move a stock. It's worth noting that some of this improvement reflects the company's lack of profitable growth during the COVID era, but the direction of travel is positive. Taken together, steady top-line expansion, healthier free cash flow dynamics, and improving capital efficiency, Bloom Energy presents the profile of a business tightening its fundamentals while scaling a differentiated energy technology. All eyes are on Bloom's upcoming Q3 results, expected to confirm its growth is hitting a new gear. The company's momentum is undeniable. Ultimately, the numbers matter. Bloom's financials show a company in transition to profitability. Q2 2025 saw a significant reduction in operating loss, with revenue growth outpacing expenses. Analysts expect Bloom to achieve positive GAAP earnings soon, a milestone that could attract new institutional investors. Strategic partnerships and capital raises have strengthened Bloom's balance sheet without excessive debt. This financial stability allows for investment in manufacturing, R&D, and long-term contracts. Bloom now has a proven product, a massive market, and a clear path to profitability. The risk profile is shifting from survival to domination. The financial results are proving Bloom's potential is not just possible, it's probable. Looking ahead, Bloom Energy's growth runway is not just long and wide, it's accelerating. As the world faces mounting pressure to decarbonize and modernize its energy systems, Bloom stands at the intersection of innovation and necessity. The company's technology is uniquely positioned to address some of the most urgent challenges of our time, from reliable power delivery to sustainable energy generation. The explosive rise of AI, the relentless expansion of data centers, and the increasing instability of traditional power grids are not just passing trends, they are seismic shifts reshaping the global energy landscape. Data centers in particular are hungry for reliable, clean power, and Bloom's solutions are tailor-made to meet these demands. As governments and corporations commit trillions to overhaul energy infrastructure, Bloom is emerging as a critical enabler of this transformation. Its solid oxide fuel cell technology offers unmatched efficiency and flexibility, making it a cornerstone for the next generation of energy systems. The scale of opportunity is immense, with new projects and investments announced almost daily. Strategic partnerships with industry giants like Oracle, Quanta, and Brookfield are embedding Bloom's technology at the very core of global infrastructure. These collaborations not only validate Bloom's solutions but also open doors to new markets and applications, amplifying its reach and impact. By forging deep relationships with its clients, Bloom is creating a sticky customer base, one that is likely to expand as energy needs grow more complex. This network effect acts as a powerful growth flywheel, driving recurring revenue and long-term loyalty. The path forward is clear: scale up production, drive down costs through innovation, and aggressively expand into emerging markets like green hydrogen. Bloom's ability to adapt and lead in these new frontiers will be key to its continued success. If Bloom can execute on these fronts, it will not only cement its position as the leader in decentralized power, but also help shape the future of global energy. The upcoming earnings report is just the next milestone in a much larger journey. For investors and industry watchers alike, the long-term story is becoming increasingly compelling. The real question now is whether Bloom's current valuation truly reflects its strategic importance, or if we're witnessing only the early chapters of a much bigger story. The potential for growth, innovation, and impact is enormous. What do you think? Share your thoughts below, and if you found this valuable, don't forget to like, share, and subscribe for more insights on the future of energy and technology.